Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Thursday, July 15th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Game Plan Financial. Every game has a winner, every winner has a game plan. For more information, please visit gameplanfinancial.com. Now for today's headlines. The largest overhaul of the U.S. financial system since the Great Depression is expected to pass an important test today in Congress, clearing the way for President Obama to sign the measure into law. Democrats are expected to gather the 60 necessary votes, and Senate Democratic leader Harry Reid said he intends to hold a final vote later today before sending the measure on to Obama's desk. The bill, which will bolster regulation throughout the financial industry, has already been approved by the House of Representatives. Among other things, the legislation would create new consumer protections, provide greater authority to regulators concerning the dismantling of struggling firms, and place limits on various risky activities, many of which have been blamed for contributing to the financial crisis. In economic news, banks repossessed a record number of homes in the U.S. during the second quarter, according to RealtyTrac. High numbers of job losses and wage cuts continue to take their toll on Americans and the housing market. During the second quarter, banks repossessed 269,962 properties, up 5% from the previous quarter and 38% higher than the same period last year. According to RealtyTrac Senior Vice President Rick Sharga, the housing market is still struggling with, quote, unemployment, economic displacement in general, and still sits on over 5 million seriously delinquent loans that in all likelihood will at some point go into foreclosure, unquote. He added that in 2005, approximately 530,000 households received a foreclosure notice, while banks took over just 100,000 houses. This year, more than 3 million households are expected to receive at least one foreclosure filing. In insurance news, U.S. property casualty insurers reported $11.5 billion in net profit for the first quarter of 2010, up from a $900 million loss for the same period last year, according to a recent report by AM Best. The report says that the upswing was largely fueled by $2.9 billion in realized capital gains for the period, compared with $7.9 billion in realized capital losses for the quarter last year. In addition, net premiums written were down for a record 10th straight quarter, falling by 1.2% to $105.8 billion. Meanwhile, the combined ratio rose 1.2 points to 101.1%, while policyholder surplus increased 24.4% to $545.4 billion for the 12-month period ending March 31st. In the commercial sector, insurers reported a 100% combined ratio, excluding results for mortgage and financial guarantee insurers, compared with a 96.9% combined ratio for the same period in 2009. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.